Should I as an investor rely on rental income to cover mortgage plus expenses? The answer in Dubai is yes. It is achievable and a central part of the investment strategy for many successful buyers, but it requires careful selection and a conservative calculation. Or the mortgage approval reality? First, it is important to understand the banking perspective. Banks do not rely on projected rent for approval. In the UAE, banks do not typically issue a mortgage based solely on the property's projected rental income, unlike the debt service coverage ratio, DSCR, or buy-to-let models sometimes seen in other markets. They will primarily assess client personal income and debt burden ratio, DBR, to ensure you can cover the mortgage payment. So client income is key. For you to qualify for a loan, client monthly income must be proven to be stable enough to cover the payment independent of the rent. 2. The investor's goal. Cash flow. Positive. Once the mortgage is approved, the goal is to structure the deal so the rental income covers all costs. A property is cash flow positive when client annual rental income is greater than client annual expenses, meaning mortgage payments plus operating cost. Cash flow, rental income, mortgage payment, plus service charges, plus management and maintenance fees. The target zones for positive cash flow. Because Dubai offers high rental yields, often 5.5% to 8% net, it is highly possible to be cash flow positive, particularly in these types of properties. 3. The 3 critical costs to factor in. Many investors forget to include the full spectrum of costs, which can turn a cash flow positive projection into a cash flow neutral or negative reality. Service charges. This is client's biggest annual cost. We must use the actual historical service charges for that building and factor them in monthly. Maintenance and vacancy reserve. You must set aside a buffer. We typically use 5% of the annual rent plus a 1-month vacancy factor for repairs and tenant gaps. This ensures a cash flow positive position even during lean months. Interest rate fluctuations. If you opt for a variable interest rate mortgage, we must model the cash flow, assuming a conservative interest rate increase to ensure the property can withstand market shifts. However, do not rely on the rent to cover the debt, but structure the investment so it does cover the debt. This means conservative rent. Use the lower end of the RERA rental index for client projected income. Higher deposit. Put down more than the minimum deposit if client goal is immediate cash flow. Target high yield areas. Focus search on communities known for consistently high net rental yields, such as Jumeirah Village Circle, JVC, or certain towers in Jumeirah Lakes Towers, JLT, for example.